One of the most common questions I get asked as an investor is what's happening next with prices. Now, while Simon and I don't have a crystal ball, we obsessively look at the past and also look at what the likes of the big banks and the best analysts in the world are saying at any point in time. So in this short video, we want to bring our ideas to you based on the opinions of the greats around what's coming next and what you can expect out of 2022. Cool, bro. So you and I have been doing a heap of analysis at the moment, a heap of looking at what's coming next, not just for our own portfolios, for our clients as well. So what's one or two of the most important piece of information you've picked up recently?
I think the most exciting one that I stumbled across earlier this year was Simon Priestley from Propertyology. Now, he did a really long article talking about Australia's current economic position, talking about his projections for the property prices over the next couple of years. And he's feeling real bullish about the property market. He feels things are looking a lot better than what some of the other analysts are talking about at the moment. And he's come out with a super bold prediction saying that he believes Brisbane property prices could rise by 27% in 2022. Now, only time is really going to tell there. But over the next couple of years, he was indicating that he feels as though real estate prices could go up somewhere between 30 to 45% in markets like Brisbane, Adelaide, Hobart, the ACT. So a lot of these satellite cities, a lot of these cities that have underperformed over recent years, he's tipping to start coming through now.
I love it, man. Now, while I felt like really good about reading that, obviously you and I are skeptical as well all the time. So a lot of the big banks with the big budgets and the best analysts are saying something quite different than that for this year. So what are the likes of the major fours sort of saying at the moment?
Yeah, look, they all are indicating that it's going to be another positive year. All of them saying that the market is going to increase up here in Brisbane. Now, if we go through each of those big four banks, CBA is calling an increase of potentially 7% up here in Brisbane, where Westpac's saying somewhere around 10%. So another double-digit growth year is what they are expecting. Then NAB, a little bit more conservative, indicating around about a 5% increase. And then finally, ANZ, very similar to CBA at about 7% there as well. So once again, we don't know how this is all going to unfold, but it is really nice and it gives me a lot of confidence when I'm seeing positive projections from all of these big analysts and big narrators of the property market.
You know, me and you, man, are always looking conservatively. So when I'm running the numbers on my own portfolio, I'm really looking at, I'd be stoked with 4 to 5% growth on average in my Sydney, Melbourne or Brisbane properties longer term. When these guys are sort of saying it could be a 7 to 10% year, happy days.
Now, obviously, those big banks and Simon Priestley as well have got to get those predictions from somewhere. So what's sort of behind the curtain and what's some of the things that we've been reading and seeing from these guys that is giving them a bit of confidence with the property market?
I think the big one at the moment, man, that's driving prices up all around the world at the moment is ridiculously low interest rates. So there's an extremely strong correlation between interest rates remaining low and asset growth in terms of property prices. So that's been huge. There's also above average inflation at the moment. So like I do, I geek out and I went and back tested property over literally the last 12 months, 5 years, 10 years, 20 years, 50 years in the likes of America, the UK plus Australia. And then I overlaid inflation. And when I looked at inflation over that period of time, generally, when we get big chunks of inflation, certain asset classes don't do as well, but property is one of them that does exceptionally well. So we're also seeing at the moment the strongest inflation levels in a decade in Australia, ridiculous inflation levels in the UK plus America, and that's artificially throwing the prices up of property as well.
And I've been talking to a lot of different investors at the beginning of this year. I probably had close to 50 conversations with previous clients or new people looking to get into the market. And I'm really feeling that as well. A lot of people have managed to increase their income recently and have certainly seen some really positive gains in their property portfolio as well. So I know it hasn't been the entire economy and everybody, but there's certainly a lot of wage growth occurring in certain sectors at the moment.
You know, one of the things that's come out for COVID for me, because, you know, when COVID first started in 2020, I just went back to history. So
Yep.
you and I looked at 13 previous mid-cycle slowdowns over 200 years, and we figured out that there's a pattern to this type of environment. Now, one of the things that we did find when we started to dig deep is the Great Depression, for example, was considered the worst economic environment in the last 100 years. But for people that had a university degree, even though the unemployment rate across the board was above 20 to 30%, the unemployment rate for people with a uni degree during the Great Depression was under 8%. Now, if you look through COVID, people with trades, people with university degrees, again, the average unemployment rate because of hospitality, tourism, travel, events, hospitality was like sky high, like 25% at some points. But then you look at the the people with good education and good trade backgrounds, the unemployment rate sat below 7% the entire time. So I think one of the big things that I've learned that I'm going to carry forward is education and meaningful skills to the market pay, whether it's a Great Depression or a COVID style year. And what we've done as a government out the back of this is spent ridiculous and committed ridiculous amounts of money to infrastructure. I think we're looking the other day between now and the end of 2025, we're looking at about $200 billion worth of completed projects. On top of that, international borders are opening up like imminently. And off the back of that, another 200,000 people per year for the next 10 years at least will come into Australia. And then population in certain markets like Hobart, like Adelaide, like Brisbane, like the regional parts of Australia has just sucked the 100,000 people that left Sydney and Melbourne in the last year and a half straight into them, which is putting huge pressure on vacancy rates as well.
And I think something that isn't talked about too much as well is the amount of money in Aussie bank accounts as well. Like Aussies have been able to save a hell of a lot of money without being able to travel or, you know, go out to breakfast, lunch, dinner, whatever it might be over the last couple of years. So they've pocketed. And I think in the Simon Priestley article, they were indicating around $220+ billion in Aussie bank accounts and Aussie redraw accounts as well, which is unprecedented.
The last thing that I'm liking the look of at the moment is the unemployment rate as well. It is tracking lower than expected for this time of the year and this time of the cycle. So that's another positive. Full employment, lack of, I just talk to everybody in almost any industry, whether it's IT, whether it's engineering, whether it's trade, whether it's marketing services, and there's an undersupply. I'm talking to a lot of our clients that are in the big mining companies and they're jumping ship, moving to different sites, not just for a little pay increase, but for $50,000, $100,000 a year more type increases. So it's kind of exciting. Like there's a lot of good stuff coming. Obviously with an election on the horizon, as well as interest rates rising, it's going to absolutely affect sentiment later this year and into the new year. Some of the banks are forecasting a negative year next year. Some of the analysts are expecting a 20% growth year again next year. At the end of the day, it's about talking with your financial advisor or your accountant about your position. As always, staying safe and only moving forward if it's a longer term plan. On any year you could make money, on any year you could lose money. So fingers crossed 2022 ends up as a positive year for whatever you're doing.
Woo! That's a wrap.
That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?
Oh.